Welcome to your AI fix. You are listening to AI with Shaily. I'm Shailendra Kumar, your guide through the fast moving world of artificial intelligence. Today, let's dive into a hot topic that's got the financial and AI communities buzzing: the looming AI bubble deflation expected in 2026. Picture this: it's early 2026, and the stock market is buzzing with alarm bells. Giants like Nvidia, Palantir, and Microsoft are experiencing sharp sell offs. Suddenly, Michael Burry, the same guy who famously called the 2008 housing crisis, drops a viral post comparing OpenAI to Netscape, suggesting that this AI bubble might just implode spectacularly. The post draws over 2 million views and sparks feverish debates online. What's driving this worry? Investors are looking at some pretty eye watering numbers. The Buffett Indicator sitting at 221%, Shiller PE above 40, and tech stocks making up a staggering 30% of the S&P 500. That's a recipe for a market correction, or as many are calling it, a potential dot-com style crash. Just consider Nvidia's colossal $300 billion market cap loss, Palantir's 27% drop, and Microsoft's 18% decline despite solid earnings. These shifts have people asking, is this a healthy market reset or a real crash in the making? Investor sentiment reveals an interesting picture. Nearly 79% of North American institutions foresee a correction this year, with about half predicting a 10 to 20% decline. The prediction markets reflect this too. There's about a 36% chance of a US recession and a small but noticeable fear of a market circuit breaker on the NYSE. But here's an intriguing angle. Some experts compare the current AI infrastructure build-out to the 19th century railroad boom: big, messy, and expensive, but ultimately game changing for growth. That means if AI adoption accelerates by 2028, this dip might just be a blip. Yet, regulatory hurdles and sluggish enterprise uptake are throwing cold water on that optimism, keeping bearish voices louder in the room. I remember early in my AI journey hearing skeptics point to the AI hype cycle and worrying the excitement was all just a mirage. But just like the early railroad days or even the dot-com bust, sometimes the greatest innovations come out of the ashes of volatility. So here's a question to chew on. Will the AI bubble deflate just enough to clear the air for sustainable growth, or are we in for a wild market tumble? Before you go, here's a bonus tip. If you're thinking of investing in AI stocks, look beyond the hype. Analyze infrastructure build-outs and enterprise adoption rates, not just the headlines. The true AI winners will ultimately be those who ride the waves of innovation, not just the hype cycles. As the legendary investor Warren Buffett once said, be fearful when others are greedy and greedy when others are fearful. Stay connected with me, Shailendra Kumar. Follow AI with Shaily on YouTube, Twitter, LinkedIn, and Medium for the latest insights you won't want to miss. Subscribe for new episodes, and don't forget to share your thoughts on the AI bubble in the comments. Is this the end of AI's golden run or just a market breather? I can't wait to hear what you think. Until next time, keep questioning, keep exploring, and keep your AI radar sharp.